All right, everyone, it is 1 o'clock Indy time. Welcome to the afternoon session of the 2021 Budget Workshop. Again, I'm Haley Treefan at the Indiana State Library, and we are joined this afternoon by Susan Gordon and Todd Caldwell. They are Directors of Audit Services for the State Board of Accounts. And I think we're going to start with Susan.
Thank you, Haley. Well, welcome everybody. I hope you all had a nice lunch. We do have several things to go over with you today, and so I'll just get started on that right away. The first thing that we have to talk about is a bit of a legislative update. I'm sure there were several interesting bills. I know there were passed this last session. We're not going to go through all of those. Primarily what we're concerned with is those that would impact your audit or maybe things that we review for your audit. So we're going to go through those right now. The first one that we have relates to cybersecurity. Unfortunately, cybersecurity events are happening way too frequently anymore. So now the State Office of Technology is going to be a repository for cybersecurity incidents. And those are defined in the statute to include things like ransomware or compromise of a business email or some other incidents maybe that are defined by the Office of Technology. So the library needs to keep two things in mind. First of all, if you have a cybersecurity incident, you need to report that now to the Indiana Office of Technology without unreasonable delay, is what the statute says, and not later than 2 business days after you discover the cybersecurity incident. And next, you'll need to provide a name of a contact person for the library to the Indiana Office of Technology by September 1st. Of 2021. We don't have any information yet. I mean, the law just passed, so I'm sure the Indiana Office of Technology will be working on this and let everybody know where to provide that information. And the one thing that we wanted to talk to you about on this is if you have a cybersecurity incident and it results in a loss that's greater than your materiality threshold, don't forget that you still have to report that to the State Board of Accounts. Now, the next one on the list is House Enrolled Act 1271, and that's the Department of Local Government Finance bill. I'm sure Fred talked to you a lot about that this morning, so I won't go into it in any more detail. Just wanted to point out, I guess, from our perspective, that it does allow you to transfer up to 15% of your budget to the rainy day fund for the calendar years 2021 to 2024. And then the next one has to do with electronic meetings and electronic signatures. COVID, of course, has forced us all to learn how to work remotely last year, especially in how to conduct our public meetings electronically, maybe how to sign things electronically. And we are still in a state of emergency right now, but when that is lifted, there will still be the opportunity now to hold public meetings within certain parameters, and I'm going to go over a few of those now. Also, what came through this bill was the ability for your board to sign bonds electronically. The statute specifically states that a signature on bonds that's electronic will have the same force and effect as a manual signature. Now, there are certain rules, as I said, for when a state or local disaster emergency has been declared, such as right now. So they've clarified that if we're in the situation that we are now. And what this says is that a physical meeting is not required until the disaster emergency is terminated, and that your board may meet by any means of electronic communication if at least a quorum of the members participate in the meeting, either electronically or in person, and then the public can simultaneously attend and observe that meeting. Meeting minutes do have to have certain pieces of information in them, like which board members were present, which board members were absent, which ones were meeting by electronic means, and then how the public was able to view the event and observe and attend that event. All votes do have to be taken by roll call vote. And then it's our audit position, we've had this question several times, it's our audit position that the meeting minutes can be signed electronically by your board members rather than physically signed. Okay, so what happens then if it's in a time of non-emergency when the, especially the emergency declaration we're in right now is lifted? Well, they still are allowing electronic means of meeting, and it's permitted if all participating members can simultaneously communicate with each other, and it also allows the public to simultaneously attend and observe the meeting. The library does need to adopt a written policy establishing the procedures that apply to a member's participation in a meeting by electronic means, and it can be more restrictive than what's provided for in the code. It does say that a member participating electronically is considered to be present for purposes of establishing a quorum, and that a member can participate in final action only if the member can be seen and heard. Meeting minutes, again, have to have certain pieces of information about the members, whether they were present physically, whether they were meeting electronically or absent, and also identifying the method of communication used for the public. And all votes, again, must be taken by roll call, and the meeting minutes can be signed electronically. That's our audit position on that portion. Now, there are a few other things related to this. At least 50% of the members of the governing body do have to be physically present at a meeting. A member of the governing body cannot attend more than 50% of the meetings in a calendar year electronically, unless that electronic participation is due to certain circumstances that are listed in the code. And those types of circumstances are military service, illness or other medical condition, a death in the family, and a few other things that would be excused. A member of the governing body cannot participate in a meeting of the governing body by electronic communication if the governing body is attempting to take final action to adopt the budget, make a reduction in personnel, initiate a referendum, establish or increase a fee, establish or increase a penalty, and a few others that are listed in the statute. A governing body may not prohibit a member of the governing body from attending consecutive meetings by electronic communication. In fact, it says that a member can attend 2 consecutive meetings, or what they have termed a set of meetings, by electronic communication. But a member shall physically attend at least 1 meeting between sets of meetings that the member attends by electronic communication, unless it's due again to those items that were listed. Okay, another one that that you'll find interesting is the public notice by political subdivisions. If a political subdivision is required in Indiana Code 531 to publish notice in a newspaper 2 or more times, then the first publication of notice in a newspaper is considered, should be done by newspaper, and the second publication can be done by posting it to the official website of your library. Okay, now that notice on your website does have to be in a location on your website where it's easily accessible and identifiable. And it has to remain on your website not less than 7 days after the last posting date required by the law has expired. The political subdivision or someone that the political subdivision contracts with to administer the website shall create a printed copy of any notice on the official website in a format that includes the date of the publication on the first day that the legal notice is published on the website, and maintain a printed copy of that notice for archival and verification purposes. And then a proof of publication does have to be furnished upon request, and it must state that the notice was posted from the initial date through the last posting date that's required by law. Proof of publication of an electronically published notice for the purpose of complying with the public notice requirements is satisfied and considered conclusive upon the provision of the proof of publication that was described, that's been executed by the official designated as responsible for electronic publication, and stating the notice was posted on the initial date through the last posting date required by law. So what you'll have to do is you'll need to designate an official of your library to be responsible for electronic publications and then post that person's name to your website along with their contact information. Okay, that's all I have for the legislative update section. What I'd like to talk about now for the remaining time is the enhanced regulatory basis of accounting. It's been a while since we've talked about this. If you remember, back in 2019, we hit it pretty hard. In fact, I think that's all we've probably talked about that year. If you'll remember, there were going to be 2 phases, ushering in changes to the long-term debt and lease notes, transfers and pensions and OPEB notes, and that caused a lot of changes in Gateway. And then we were also trying to prepare you for a second phase of enhanced regulatory that would require the auditing of capital asset information for inclusion in the financial statement notes. Well, we were all moving right along with that, and then COVID hit and put the brakes on the enhanced regulatory basis of accounting. And the primary reason for that was our agency did not want to impose on you any more issues to deal with other than what already had to be dealt with due to COVID. Well, now we're kind of all in a situation where we have our feet back under us, so it's time to implement that enhanced regulatory basis of accounting now. So this presentation is going to be partly a review and partly a discussion on where we left off, where we are now, where we're heading. But just as a little bit of a review, the purpose of updating the regulatory report format is to meet the demands of our financial statement users, especially bonding companies, rating agencies, legislators, and taxpayers. There is an increasing demand for GAAP type information, and it's become very clear that changes to our regulatory format are necessary to meet those demands. So the Board of Accounts has decided to pull in some elements of GAAP reporting to satisfy those demands. And that is, of course, the information that's most commonly needed, like debt information or capital asset information. Libraries are not required to file GAAP financial statements, although it is certainly an option if you would want to do that. But today we're just going to focus on this enhanced regulatory basis. Now, as I said earlier, originally this was going to be phased in over a 2-year period. But because of the delay, it's now all going to begin with audits that have an audit period starting as of January 1, 2021. So this might be a little different for those of you who have multiple year audits. And just as an example, if your next audit begins on January 1, the audit period begins on January 1 of 2018 and goes through December 31st of 2021, these changes are not going to be reflected in your report. It's only going to be if your audit period starts on January 1 of 2021. But we don't want you to tune out for the next 40 minutes or so, because what we are going to talk about is going to have to be entered into Gateway, regardless of when your next audit period is. So you will want to know what the changes are. Now, you might remember this chart. We used it extensively back in 2019. It went through the regulatory changes for 2019 and 2020, which of course are now all in 2021. The dates are not correct on it, but it's still useful to let you know about all the changes that are taking place. If you want to see it, you can go to our website and search for Schedule of Regulatory Changes, and it should pop up for you. It's not right out in front anymore because it is outdated because of the dates, but it's still useful. One major impact from the enhanced regulatory is going to be the way that your financial statements are presented. And Todd is going to go over that a little later. So I'm just going to skip that right for now and go right to the notes to the financial statements. I'm going to go through each one and give you an idea of what each note talks about and whether the information that you have to enter into Gateway will change as a result of the new enhanced regulatory. Okay, this is all in note 1. There are several different sections here. and we'll just kind of talk about them briefly. First is the reporting entity, and that just talks about that how your library was established, that you operate under a library board, and what services you provide. So there's not anything going to change there. The basis of accounting explains that the regulatory basis is prescribed by the State Board of Accounts, that it's on a cash basis, and then it talks about how it differs from accounting principles generally accepted in the United States of America, or GAAP. Cash and investments discusses that investments are stated at cost and that changes in fair value are reported as receipts in the year of sale. And then the receipts and disbursements section of this note details the types of receipts that are typical for a library, and also the types of disbursements that you would have, like personal services or supplies, other services and charges, and capital outlay, and so forth. Interfund transfers explains that the library may make transfers from one fund to another, and those transfers are included in the receipts and disbursements of those respective funds. It is stated that interfund transfers are used for cash flow purposes as provided by various statutory provisions. And then the fund accounting section, it's just really a basic explanation of fund accounting, that separate funds are maintained to account for amounts received from or used for specific sources and uses, and that some of the restrictions are based on statute and some restrictions might be based on local policy or resolution. You can see at the very bottom for this note, there will be a capital asset note section added to this note for 2021. And I can kind of show you what that might look like. This is just a draft, so it could change. But it's basically going to detail like classes of capital assets like land and buildings, infrastructure, improvements other than buildings, machinery, construction in progress, and books, and other. It'll also state that assets will be valued at historical cost or possibly an estimated historical cost. And it'll discuss special exceptions for donated assets and make a distinction between improvements and repairs and maintenance. Do note that at the very bottom that the capital asset threshold is listed in this note. If you don't have a capitalization policy yet, please encourage your board to do so. The amount is totally up to the board, whatever they consider to be material to the financial statements for reporting your capital assets. Okay, the next set of notes that I have to go over involve budgets, property taxes, deposits and investments, and risk management. In the budget section, that's just really a summary of the budgeting process. Property taxes details or describes the property tax collections and assessments along with the levy dates and the due dates. And then regarding deposits and investments, information for the financial statement user, that deposits made in accordance with the statute are entirely insured by FDIC or the PDIF. And it also describes investments which may be purchased by a library. And finally, there's a description of the types of risk to which a library might be exposed and a method to mitigate those risks. For example, loss related to torts, theft, damage to or destruction of assets, and so on, that can be mitigated through the purchase of insurance or other means. And then this next section involving debt, this is where a lot of changes are happening. Obviously, debt and any cash deficits are of interest to bond agencies. So let's go through each one of those to see what the changes are for you and the information that you're going to need to gather. The long-term debt note, this information, of course, used to be in the unaudited section of your report, which just showed the ending balance and the payment due in the next year. And the long-term debt note will change significantly and be in two separate sections now. The first section will be titled Changes in Long-Term Debt, which will show the beginning balance, additions, reductions, and ending balance for each debt class. It will also show the principal and interest due within the year. We We have already changed the AFR for 2019, in 2019, to include this information. So that is already there, thankfully. So there's not going to be any further changes to the AFR for this note, as far as I know. The second section of the note will be titled Debt Service Requirements to Maturity, which will show the principal and interest due in increments until maturity, which is the same thing as the amortization schedule contained in your debt management report. Now, you do not have to re-enter this information. We'll pull it directly from the DLGF report to compile this note. Just make sure you keep that up to date. So there should be no changes in Gateway related to this. Now, for short-term debt, I imagine this note might be applicable to everyone. The short-term debt is debt that is to be repaid within 1 year, and it does include tax anticipation warrants. Short-term debt will need to be shown for 2021, even if it was paid back within the year. A description and reason for the debt will also need to be included. And you can see the proposed schedule here has the purpose for the debt, the beginning balance, additions, reductions, and ending balance for each short-term debt. I assume that there will be some gateway changes for short-term debt to accomplish this, but I've not been told what those are. We will let you know, hopefully in November. In the meantime, do keep track of any short-term debt that you have so that you'll be able to fill in any new information in Gateway or provide it to the field examiner when they come in. All right, leases. This was one of those sections that had been an unaudited supplementary piece of information before. Now the note will include a general description of leasing arrangements and information regarding your principal and interest requirements until maturity. An example for a library might be the lease of a copier or the lease of copiers. The amortization information will come from DLGF's debt management report again, so you won't have to enter that information twice. So thankfully, we don't think there's going to be any changes to the AFR for that. Interfund activity will also be shown as a note. This information consists of two categories. One is an interfund transfer, which permanently moves money from one fund to another. And the next one is an interfund loan, which is a temporary transfer and it has to be paid back to the original fund by the end of the year. And the statutory authority for that is 36184. An interfund transfer permanently moves money from one place to another, whereas the loan will be paid back. Information regarding interfund activity will include not only those transfers now, but it will also include the temporary loans that have not been repaid. The note will describe the general purpose of the interfund transfers, when the interfund transfer should be in compliance with a statute or ordinance. For example, for your case, you might make a transfer from operating fund to LERF or to rainy day. And that would be a normal transfer. Unusual transfers might need further explanation. For example, if you've transferred from a dormant fund to your operating or rainy day fund. That's not to say that you can't do that. It's just that it might be unusual. As far as the note goes, it will show transfers from one fund to another. This information is already obtained from the transfer schedule that you already complete in the annual financial report. Do remember that you show transfers in two different places on the annual financial report. One place is you'll show them in the financial data by fund section. For the fund that's receipted into, you'll show a transfer to. For the fund that's dispersed from, you'll show a transfer as well. You'll also be completing a transfer schedule to show the transfer to and transfer from on the AFR as well, and those two should match. The note again will also include interfund loans which were not repaid by 12/31, along with an explanation of why those were not repaid. So for the transfers, the information is already available in Gateway through the information that you enter. We'll let you know if there's any changes in regard to interfund loans in Gateway. For current regulatory, we have a note called cash balance deficits when applicable. And all it does is it states that the financial statement contains some funds with deficits in cash, and it names the funds which are in a deficit situation. And it also gives a reason for the deficit. In some cases, the deficit balance might be due to timing differences or reimbursement grant delays, and that was stated if applicable. For the enhanced regulatory, the title of the note is going to change to deficit fund balances, and the information will be pulled directly from the financial data by funds section of your annual financial report. So there should not be any additional work that you have to do for this note. It'll have the name of the fund, but I don't believe it has the reason for the deficit anymore. Okay, the next section is significant contingent liabilities, significant commitments, and subsequent events. The notes to the financial statements regarding the significant contingent liabilities and significant commitments have not previously been incorporated in the report. Subsequent events have been a note disclosure as part of your current regulatory format. The note for significant contingent liabilities, if applicable, will describe the contingent liability and the dollar amount of that liability. And some examples of that would be a lawsuit. For example, maybe your library was being sued for wrongful termination, and maybe the jury awarded money to the employee, but then the library appealed that decision. Until it's finally resolved, this would be a contingent liability, which should be disclosed. So that's the type of information we're talking about there. And then the determination on whether that contingent liability is significant would rest with the library board, and our field examiners could give you some factors to consider as to whether or not that would be material. This information is gathered from board minutes, through inquiry, and through the management and attorney representation letters. I wouldn't expect any AFR changes for this note. Significant commitments is also one that has not been disclosed in the past. For significant commitments, the GASB refers mainly to construction contracts. As an example, the library has a contractual obligation to expand the library building in the amount of $750,000. This also should not require any changes to the Gateway annual financial report. Instead, the information should be available in board minutes, through inquiry, and attorney and management representation letters. So that's where our field examiners will get that information. And then information regarding subsequent events has always been disclosed in the notes. Under enhanced regulatory, a description of the event and the dollar amount will be included. Usually this describes information pertaining to the issuance of debt or a major casualty loss, such as the natural disaster. I wouldn't, again, not expect it to involve any AFR changes. Our field examiners will make inquiry with you and through the management representation letters for that. Pension information is already included in the notes to the financial statements. In the current regulatory, each plan is briefly described along with the funding policy, which is usually a reference to the applicable statute. But the note is going to be expanded significantly, and it takes up several pages of the report. The short pension note has expanded greatly, and it contains a description of each plan that's offered, detailed information on the full retirement benefits and how that's calculated, as well as benefit calculations for early retirement and disability and survivor benefits, cost of living adjustments, and all of that type of information, including actuarial assumptions, the discount rate, and pension liability. So that is a lot of information. The good news is that the information is already available. It is available in Gateway through the AFR and through NPERS. So most of that information is going to come through them. For other post-employment benefits under the current regulatory format, it does talk about the type of benefit offered, the fact that the plan does not pose a liability. Sorry, that's the city or town, it should say library. And then it has instructions on how to obtain the plan information. Under the enhanced regulatory, it's going to be more detailed and have a plan description, information on the benefits provided, if there's any actuarial information that will be included, and contributions. I wanted to point out, if you missed it last November at the workshop, we had an hour-long presentation by Leanne Tinsley from our office on OPEB. She did a great job explaining everything and how it relates to libraries and the plans that you have. So if you want to go back and review that, you can go back here where it's shown being on our website, and you can review her slides in that recording. Now, the next section I have is, and these are all new, tax abatements, related party transactions, joint ventures, and conduit debt. And, I'll be honest, these are all difficult to understand. I don't know if there'll be any gateway changes or not, but we'll let you know in the fall if there are. In the meantime, we'll go over these briefly, and then as it gets closer, maybe we'll be able to answer some more specific questions, or if you want to talk through it with us individually, we can do that. Now, the first one involves tax abatements, and I would venture that many of you will have some reporting in this area. Libraries do not grant tax abatements, of course, but the libraries may have a revenue reduction if a tax abatement is granted by your county or city or town. So that's what this note is going to disclose. You should be able to get all of this information from the county auditor, and the county auditor has been notified that you may be requesting this information. So under GASB 77, the term tax abatement is defined as follows. It's a reduction in tax revenues that results from an agreement between one or more governments and an individual or entity to which one or more governments promise to forego tax revenues to which they would otherwise be entitled, and the individual or entity promises to take specific action after the agreement has been entered into that contributes to the economic development or otherwise benefits the government or the citizens of those governments. So in the note disclosure, there's going to be a description of the abatement and the dollar amount by which tax revenues were reduced. For tax abatements of another political subdivision that affects your tax revenues, here are the things that you're going to need to document. And remember, you can get this from the county auditor. You're going to document the other governmental units that entered into the agreements and the specific taxes that were abated. You'll document the gross dollar amount on an accrual basis by which your tax revenues were reduced during the reporting period as a result of the agreements. And if there are any amounts due or paid to your governmental unit by another governmental unit to offset the loss of tax revenues, you'll need to document that as well. The tax abatement statute is here for you, 6-1.1-12.1. The information that's required to be disclosed is contained in the forms used to apply for and receive abatements, and those forms are filed with the county auditor's office. But in addition, there should be resolutions passed by the county or the city or town that would contain information on the abatements. At the end of the year, the county auditor is required to publish that in a newspaper and file a report with the Department of Local Government Finance. And that lists all deduction applications filed for that year for which deductions were approved. And that would also be a source of information. Now, our county supervisors, not supervisors, our county directors of audit services have been in contact with the counties to let them know that you may need this information from them. So they will not be surprised. Okay, related party transactions. If there is a related party transaction that needs to be disclosed in the note would involve the nature of a related party relationship and the dollar amount of any receivables or payables. I believe that our field examiners will be inquiring about this, but we just wanted to let you know that this note will be in there in case there are any gateway changes that we need to let you know about in the fall. For joint ventures, a joint venture is a legal entity or other organization that results from a contractual arrangement that is owned, operated, or governed by two or more participants as a separate and specific activity subject to joint control. There does need to be an ongoing financial interest or an ongoing financial responsibility. Again, the financial statement note will include a description of the joint venture and the financial interest or financial responsibility for that joint venture. And that is probably something that our field examiners will be asking you about, again, if there's any such organization for your library. Conduit debt is another note that will be in the report. I'm not aware of any situations where this would apply to a library, as it involves government entities that issue debt on behalf of other organizations, usually for economic development purposes. But I did just want you to know that it was in here and part of the notes, the general notes to the financial statements for the enhanced regulatory basis of accounting. Okay, I have saved the best for last, capital assets. This seems to be the most scary subject of all. We did a lot of training on capital assets in 2019. And hopefully you've all had time to establish your capitalization policy threshold and put your capital asset ledger in order. That capital asset policy threshold is the dollar amount for which a capital asset is deemed material for financial reporting purposes. And that amount is totally up to your board. Only those assets which meet that threshold will go onto your capital asset ledger, which is Form 369. Now, that does not mean that you don't have to keep track of your other assets. It just means that they're not reported on the financial statements. Now, prior to 2021, the capital asset schedule was included in unaudited information, that section of your audit report. But for 2021 and beyond, it will be included in your financial statement notes. I know you've all been working hard to prepare for this, and in preparing for this, many of you have had to make adjustments to your capital asset ledger. This is fine. You just want to make sure that you want to make sure your capital asset ledger is correct. And if you have made adjustments, make sure that you can reconcile the adjustment that you have now to the adjustment to the balance that you had prior to that. Our field examiners need to be able to follow. That's what I'm trying to say, is our field examiners need to be able to follow those adjustments that you have made. Okay, here's an example of what the format looks like now. You can see that it only shows the ending balance for each line of assets for land, buildings, improvements, and other than buildings and so forth, and coming down to a total ending balance. The amount of information is going to be much more significant in the enhanced regulatory updates. It's going to have additions and reductions to capital assets. It will have a place for accumulated depreciation, and it will be contained in a financial statement note now. Now, the good news is that you've already been entering information for additions and reductions in capital assets, so that is not going to change. There will be a change for accumulated depreciation. Let's take a look at the note as we think it will look. Again, this is just a draft here, but you'll note at the top, we have beginning balance for the 1120 here. It'll be 1121. Then we're going to add additions or things that you purchased during the year. You're going to take off the reductions, which are the things that you've disposed of during the year, and then arrive at the ending balance. So these three columns with the yellow arrows, those are all new. And then if you come down here to this red arrow, you can see that you have taken accumulated depreciation from those items that are depreciable. Now, capital assets not being depreciated, you can go toward the top of this column here. Capital assets not depreciated would be land, construction in progress, and for libraries, probably some artwork would also be items that are not depreciable. Now, there wasn't time today with the other updates that we needed to give to go through some specific depreciation examples, but Todd and I do have that in the works, and we'll either have a special WebEx meeting with you to go through specific depreciation options for you so that you can figure out what accumulated depreciation will be. We'll be doing that hopefully in the next couple of months. So we'll do that either by a live WebEx meeting or we'll do a recording. Either way, there'll be a recording, whether it's live, we do it live or not, but because we'll record that session. So be looking for that. We will let the state library know when we're going to do that so they can get the word out to you, and we'll send out word through our e-gov delivery service as well. We just wanted to make sure that we took ample time to do that because we anticipate a lot of questions and we want to give as detailed examples as we can. Okay, so a checklist when it comes to capital assets, make sure that you've established your capitalization policy. Make sure that you have a depreciation policy. We can talk more about that in the next session we do for depreciation. Maintain your capital asset ledger, which is that Form 369. Make sure you have all of your capital assets identified. You've confirmed your beginning balance for 2021. You are keeping track of your additions and your reductions. And then make sure that at the end of the year, you compare your ending balance to what your capital asset ledger says, because that's what our field examiners are going to be looking for. Document the basis for your valuation and estimated useful life, and establish internal controls over capital assets. There's a lot to think about with capital assets. As far as audit information, our field examiners are going to be asking for these items. Again, your policies, your depreciation calculations, your ledger, supporting documentation, your basis for asset valuation, estimated useful lives, and internal controls. We do have some State Board of Accounts articles on capital assets. Now in the session we did last week, I had the wrong information on the slide. This slide is correct. So if it's different than maybe what you printed off, we'll make that available to Haley and she can get that to you. But these are the articles that we have in our manual and our bulletins for you. So with that, are there any questions that we can answer now?
Yeah, I think there was at least one question in the chat that didn't get answered. It had to do with public notices. And as soon as I get there, I don't see it. Oh, someone asked, does a screenshot with date count as proof of publication? So when you're going back and talking about some of the new legislation and proof of publication, with a screenshot with the date count as proof of publication?
You know, I'm not sure. I haven't read the statute that closely to see if it describes what that proof of publication would be. So if you want to, because it says to create a printed copy of any notice. So if you want to send that message in, we can look at the statute more closely, or your attorney for the library might be able to help to make sure, or maybe the state library even will have some information for you on that.
Okay. Haley, or did you see any questions in there that I may have overlooked?
No, that was the only one that we had hanging around.
Okay. And as soon as my computer wakes up, there we go. Is everybody seeing that? I guess you can let me know if you're not seeing my title screen, but it's my turn to say welcome. We're glad you're here. And hope I've had a good day so far. I know where I am. It's been raining since I woke up at 5 o'clock this morning, and I'm not sure when it's supposed to stop, but I'm ready for it too. I talked to somebody in Northern Indiana this morning who said they hadn't had any rain. They were going through a dry spell and they would welcome some rain, but they can have all what we're getting here because I'm going to have to mow my yard 2 or 3 times here coming up. But let's go ahead and get started with my portion. Susan talked a lot about the notes and how those are changing for enhanced regulatory. I'm going to focus on the financial statements and the fund types and the fund numbers. But before we get into those specifics, let's take a second and talk about some base concepts so that we're all on the same page. I'll start off by talking about the prescribed system of accounting. And again, those fund names, numbers, and types. And although it isn't on the screen, I'll wrap up my portion with some updates on audit engagements and some policies and procedures that we're going through there. So this slide and the rest of what I'm going to talk about are related. As you probably already know, the Board of Accounts is statutorily required to formulate, prescribe, and install a system of accounting and reporting that's uniform for every public office and public account. The standards that we prescribe are to be in a written form, and we accomplish that by publishing the Accounting and Uniform Compliance Guidelines Manual for libraries. Now, in the old days, when we would come out with a new version of the manual, we would mail that out to you. It was usually already had holes in it, 3 holes in the side, so you could just slip it into a binder. And then as we would revise maybe portions of it, we would maybe send a page or 2 out every year, and you could just take that new revised page and insert it in your binder and take the old one out, and you'd be good to go. But now with the library's manual being only available on our website, each chapter is viewable individually, or you can download the entire manual to your computer if you want. If you still like that paper version, you can download the manual and then print it off and do like we used to do in the old days and put it in a binder. I talked to somebody within the last couple of weeks who was doing that because they still liked having that piece of paper in front of them. There are other manuals on our website, and one of them is the Regulatory and Financial Reporting Manual. That establishes a consistent basis of accounting and reporting for local governments. It sets the requirements for financial reporting on a regulatory basis, which is defined as a basis of accounting that the reporting entity, or the library in this case, uses to comply with the provisions of a governmental regulatory agency, or the Board of Accounts. So when we talk about these changes to the financial statements and the notes, those are going to be in a revised regulatory and financial reporting manual. You'll also find in that same section an internal control manual. You've heard us talk about that before when we're discussing internal controls and the importance of those controls. The library manual prescribes various accounting items. However, it doesn't currently include a prescribed method for numbering and reporting your funds and fund numbers. Those are currently in the Library Bulletin from December of 2019. So you might remember when we started talking about this and we were talking about the changes that were forthcoming and that there wasn't a chart of accounts or a listing of fund numbers for libraries. In order to get it out so you would have it as soon as you could, we put it in the library manual. It's going to be those names and numbers from that listing of funds that I want to focus on now. So there's a screenshot of the Library Bulletin. If you're not familiar with what I'm referring to, it's again the December of 2019, starts on page 2. And on our website under libraries, if you're not sure even where that is, I wanted to touch on that to get you there in case you wanted to go look at it. On our website, you go into on the left-hand side under political subdivisions and then select libraries. You can scroll down to the section, the uniform compliance guidelines, and then select the bulletins. By selecting, there's a little triangle that you click on and gives you a little drop-down menu. You're going to want to look for the December of 2019 bulletin and then go to page 2. Or if you feel like typing, there's the actual link in blue that you can type into your search engine and find it. And I did want to point out that the manual that I referred to a minute ago is going to be revised by the end of the year. So this chart of account will be in the manual starting for next year. But for right now, you'll want to refer to the bulletin. Now in the picture you're seeing here, we have massaged the chart of accounts a little bit to fit the fund types I'm going to talk about. But what we haven't changed are the numbers. The numbers that we came out with in December of 19 have stayed the same. And so I know many of you, switched to using the correct fund number. And we appreciate that. But I did want to take a little closer look at something that's not on there that kind of came up at the first meeting last week, the first workshop. And that's down under toward the bottom quarter of the picture there. The word custodial you'll see near the left side, and then over to the right of it is Fund 800, the public access or public library access card fund, and the Evergreen Fund, and then there's a range reserved for trust funds. I think we're going to insert a range after Evergreen for other custodial funds, because some of you have a sales tax fund. I think that's going to fit the definition of a custodial fund, and we'll talk about that, several times going forward. And if you account for sales tax that you happen to collect in a separate fund, it would be considered a custodial fund, and you'll want to put it in a range. It'll probably have a range, I would say, of $875 to $899. And then the range at the very bottom that you see on the screen, $803 to $899 for payroll withholding, that'll probably be changing the $803 just to $874. So the $875 through $899 again will be any other custodial funds like sales tax that you might have. So let's take a little look at that closer up, since that wasn't the easiest to see with it all on one slide. And this part that you're seeing now, the general and special revenue funds, those didn't change. And you can see from the column headings on the left side is the fund type. And I'll get into those definitions and what those mean a little bit later. For now, your operating fund is under the fund type of general. So your operating fund should be Fund 100. And we've reserved the next 10 numbers if you want to account for a cash change or a petty cash fund in a separate fund. Some libraries do that. You don't have to, but if you want to account for a petty cash or a cash change fund in a separate fund, you'll want to number those somewhere between 101 and 110. Next is a special revenue fund type. The specific ones listed are created by statute. So this is where you'll have a gift fund, a rainy day fund, contractual services, and levy excess. We have reserved numbers 204 through 225 for any future statutory funds that the legislature may create and adopt in statute. And that range is 204 to 225, if I didn't say that. The next series is 226 to 275. That's where you're going to put any other special revenue funds that you might have. Following that is a series for grants. So both federal and state grants are to be accounted for in a separate fund. And so depending on what grants that you get, you'll put them in that range of 276 to 299. So we've given you, 25 or so numbers to use for your grants. Here's the next part of the chart. Debt service is the next fund type. That's where you're going to account for your bond and interest redemption fund. Again, that's specified on the chart because it's created by statute. If you have multiple funds that you use to account for the repayment of your debt, you can use the series 301 to 399. Sometimes when you issue debt, the bond ordinance and the bond documents will call for the creation of a fund, and maybe it has a very specific name in those bond documents. And so if you want to, and maybe you're already using Fund 300 and you've got a new one, you can put it in 301 to 399 and call it whatever the name in your bond documents would be. Capital project funds are accounted for in the 400 series. So Fund 400 is LERF, 401 is construction, 402 is capital projects. We've reserved the range 403 to 410 for any other capital project funds you might encounter. 411 through 420 is for gift funds that are specifically for capital projects. We mentioned the gift fund under special revenue previously. If somebody gives you a gift that's for a capital project, let's say somebody donates $1 million so you can build a new library or build a new wing onto your library. That's a capital project type of item, and you would want to account for that gift in a fund number with the range 411 through 420. Any other types of gifts that you receive that are not capital would then be under that special revenue gift fund. And then on the bottom is Fund 421, that's rainy day. Again, if that's restricted to capital items, when your rainy day fund was created, your board should have identified what the uses of the rainy day fund are going to be. And some places have that they're only going to use their rainy day funds for capital type items only. And if that's your case, then you're going to want to account for your rainy day fund in 421. If your rainy day fund is a mixture, so let's say it's for certain types of projects or uses and capital projects, then go ahead and count for it up in the special revenue. We're not going to make you split the capital items out of a fund and report part of it one place and part of it the other. If 421 is going to be, if your rainy day fund is restricted only to capital assets. Really quick on these, it's likely you'll never have these. There are no funds created by statute. That would be a permanent library fund. But if you were to have one, it would be in the 500 series, 500 through 599. Same with proprietary. There are no statutory funds. You might, and when we get into the definitions, you'll see this a little later, you might have an enterprise fund. That would be in the 600 series. And you could have an internal service fund, which would be in the 700 series. An example of that will be if you're self-insured and you have a self-insurance fund, that would be in that range. And again, when we get into the definitions of those fund types here in a bit, we'll talk about those more in depth. The final two groups, and this is where the chart was massaged a bit. Clearing funds used to be listed before trusts on what you see in the December bulletin. And custodial didn't even exist. It had a different name. So now that we've decided and settled on custodial fund type, we've shuffled those around a little bit. So your plaque fund and your evergreen fund are considered custodial funds, and they're 800 and 801. And as I mentioned a little earlier, we're going to insert a range for any other custodial funds that you might have, because we know some of you do account for sales tax in a separate fund, and that would fit the definition of custodial. And so you'll be able to use any fund number in the range that we will be creating for other custodial funds for your sales tax fund. If you would ever have what meets the definition of a trust, you can use the 900 series. Now, payroll and payroll clearing funds round out the list. Payroll's 802, and that's what it was before. And your withholding funds are going to start with 803 and probably go through like 875 or 874, and then the rest of that range through 899 are going to be those other custodials I mentioned. So the numbers and the series of numbers didn't change, although we will be adding something. Those numbers, we didn't take an old fund number and make it a new one. So you shouldn't have to do much renumbering within your system if you were using that chart of accounts from December. The one exception might be if you had that sales tax fund and where you were putting it before. So going forward, and the rest of this presentation and the rest of the year as we teach on enhanced regulatory, what are you going to need to know? We're going to need to know that discussions on the funds will refer to the prescribed name for the most part, and especially the prescribed fund number. And I say for the most part, I'll probably refer to the Library Improvement Reserve Fund as LIRF, or the Plaque Fund by that acronym instead of spelling out that name. So if it has an established acronym, we'll probably use that. If not, like Evergreen, we'll call it the Evergreen Fund or the Contractual Services Fund. On your ledger, and especially on your annual financial report, you'll need to use the standard prescribed fund name and number. As I mentioned earlier, we plan to revise the library manual before the end of the year so that it will include the chart of accounts. So be looking for that coming probably in the fall. So let's recap at this point. A couple of years ago, we started looking at changes to the financial statements and the notes. For libraries, there wasn't a prescribed or established chart of accounts, so we issued that in December of 2019, and we've made some slight adjustments to fit the fund types. And now that we've all adjusted to a post-COVID or a COVID work environment, I should say, it's time to implement those changes to the financial statements. And I know many of you are wondering why. Why are we changing the financial statements, Todd? Why this chart of accounts? And I know a lot of you are thinking that because several of you have already asked, are we just doing this to change for the sake of change? Is this a precursor to going to entirely GAAP financial statements? And the answer is no, we're not changing it for the sake of change or for GAAP related purposes necessarily. If you remember this slide from earlier, part of the reason for the change is that we are to prescribe the accounting system so that it's uniform for every library across the state. What we found is libraries were using different numbers for different funds. Without that chart of accounts, the accounting statewide wasn't uniform or comparable. So implementing the chart of accounts should get everyone, back on the same page. Now that we've established this chart of accounts, we can talk about the fund types that I promised. Now, this is an image of the new financial statements, and we're going to be able to implement this, and you're going to need to know going forward what the different fund types are. So again, on the left side of the screen is the financial statement, and what you'll notice is it is presented by fund type and not how it has been before by just individual fund. And these are the fund types: general, special revenue, debt service, capital projects, permanent enterprise, internal service, fiduciary, and other. We're going to talk about each of those in more detail in a little bit. But you're probably wondering, why are the fund types important? Well, as I just described, you're going to need to know those fund types because beginning with this financial statements for 2021, which will be compiled from the next annual report that you submit in Gateway next February, those financial statements will be presented by fund type. Now, currently, this is what your financial statements look like. It shows each fund. On the left, its beginning cash balance for the year, the receipts in total for the year by each fund, the disbursements in total for each fund, and then the ending cash balance for each fund. But this is how it's going to look. It's going to be totally different. Susan mentioned that you won't actually see these until you have an audit period that starts with 2021. So in the example that she gave, where it was a 4-year audit, 2021 was the last year, to avoid having financial statements that looked one way for the first 3 years and a different way for the 4th year, or trying to change the first 3 years to look like the 4th year. We're just going to stick with the current procedure until you have an audit period that starts with January 1st, 2021. So as we look at these financial statements broken down by fund type, I just want to point out, like, there's the column for special revenue funds. So if you have 3 or 4 special revenue funds, on the statement itself, it's that we opine on. So remember, part of what we do is we put an opinion on your financial statements as to whether it's materially correct or not. So on the statement itself, all of those 3 or 4 special revenue funds will be combined into one. And the statement will report the beginning cash balance for all of those special revenue funds combined. And then there's another column for capital projects. I mentioned that beginning cash balance will be shown also, but then we get into another change, and that's a breakdown of receipts and disbursements. Instead of what the current model shows with the total receipts for the year is just one number, now by fund type, it'll be broken down into taxes or intergovernmental revenue or charges for services, those types of things. Disbursements, again, will also be broken down into personal services, supplies, other services and charges, your debt, your capital outlay. And so that'll give a little more information to the user of your financial statements. Then it'll wrap up with the ending cash balance. Now, you might be saying, well, what about the detail for those 3 or 4 funds that were my special revenue or my 2 capital project funds? Is that going to show up anywhere? It will, and it'll be called a combining schedule. And what that schedule does is simply what it says. It's going to combine those 3 or 4 special revenue funds into one total, and then that total will agree to what's on the financial statement. Those combining schedules, we don't put an opinion on. We only put an opinion on what's on the statement, not the schedule, and it's the combined amounts. So when we're talking about these different fund types, what do those mean? And why might they be important? Let's take a look at that for a second. First of all, the fund types are important because they're defined and discussed in GASB 54. GASB stands for Government Accounting Standards Board, and they issue statements. And in Statement 54 is where they talk about fund types. The GASB establishes accounting and financial reporting standards for local governments in the United States by issuing accounting standards through a transparent and inclusive process that's intended to promote financial reporting that provides useful financial information to taxpayers, public officials, investors, or anyone else who might use or rely on your financial reports. I talked a little bit earlier about, is this a precursor for GAAP statements or going to GAAP? And no, that's not required. And as Susan kind of touched on as well, there are elements of GAAP financial statements that users of your financial statements would like to see or would be useful to them. So we're trying to pull some of those elements out and put into this report to give them that information they need, and that they can still rely on a non-GAAP or a regulatory basis account or financial statements. So here are the fund types and descriptions. So let's take a look at some of those and what they mean. We'll start with general fund type. The general fund type is the chief operating fund of the library. As described earlier, your general fund is the operating fund, and any petty cash funds or cash change funds that you might have established. Tax revenues and other receipts that are not allocated by law or contractual agreement to another fund are accounted for in your operating fund. And then general operating expenditures of the library are paid from the library operating fund. Now for each fund type, you're going to see a screenshot that looks like this. It shows the prescribed fund number, which is 100 in this case, and the fund name from the slides I showed earlier, so operating fund. It also shows the gateway number for some funds. The example here shows 101006, which is separate from the fund number, and that's why I wanted to point out that the gateway number and the fund number are different, and they get confusing sometimes. And people have asked, why can't the fund number be the same as the gateway number? And I could probably take another hour explaining that whole process. But for right now, I just want you to realize that the gateway number and the fund number are different. Most of the statutory funds and gateway are called standard funds. And each standard library fund has a 6-digit gateway number assigned to it. If you had a fund that's not one of those standard funds that you create in your annual report, that's called a custom fund, and Gateway automatically assigns it a different 6-digit number that starts with a 9. So if you ever see a 6-digit number and you wondered what that is, if it starts with a 9, it's because that's a custom fund as opposed to a standard fund. When this fund was originally established in your gateway account, it should have been assigned a gateway number, this 6-digit 101006. I'm going to show you the other gateway numbers, and at the end, I'll show you where you can find those if you have questions. I just want to, the purpose of this slide is to reiterate that the fund number and the gateway numbers are different, although they can get confusing. So I wanted to point out what those were and why they're there and why they're a little bit of why they're different. The next fund type is special revenue, and it's defined as those funds that are used to account for and report the proceeds of special revenue sources. Normally, it's those funds that are not capital projects or debt services. So these special revenue sources are legally restricted or locally committed to expenditures for special purposes. The most common special revenue type funds that are found in libraries could be the gift fund, the rainy day fund, any grant funds that you get. And from time to time, you may have a levy excess fund that would show up in this category as well. So here again is our screenshot of the special revenue funds and the chart numbers. Again, the gift next to it says not restricted to capital items. So if you have a gift fund that is not restricted to just capital, or you have a gift fund that has both restricted capital and non-restricted capital, and we're going to show them here in the special revenue fund. The fund number for gift is 200, 201 is rainy day, and again, you can see the gateway number for rainy day, contractual services, and so forth. The bottom half are the ranges that we've talked about. 204 to 225 is any future statutory funds, 226, 275, any other special revenue funds that you might have. And it can include additional gift funds. So the gift fund, Fund 200, is the one that's established by statute. But if you have multiple gift funds, you can use that range, the 226 to 275. You don't have to have just one gift fund. And then again, the grant funds that would be special revenue would be 274 to 299. Debt service funds are used to account for and report financial resources that are restricted, committed, or assigned to expenditure for principal and interest. Debt service funds are to be used to report resources if legally mandated. So almost always, as I said before, your bond ordinance or your bond documents require you to establish a fund in order to set money aside so that you can make the bond payments that are usually due every 6 months and interest payments. So those are considered debt service funds. And you'll use those throughout the life of the debt to accumulate resources to pay those principal and interest. We may have referred to those as sinking funds, maybe a debt sinking fund in the past. Debt service is the appropriate fund type name, and your statutory fund is the bond and interest redemption fund. If your bond documents require it to be called a debt service sinking or the word sinking or something different than bond and interest, you can certainly use that range of 301 to 399 for your fund numbers. Now you notice the debt service funds don't have a gateway number, and that's because when gateway was established, 10 years ago or so, there were so many different types of debt service funds across the state, not just for libraries, but other units of government. And they all had different names, although they were all used to accumulate money to pay off the debt. The decision was made back then not to assign them a gateway number because it would have just been too difficult. So if you have to create a fund in 301 through 399, that's where Gateway is going to assign that one of those custom fund numbers that starts with the number 9. Capital projects funds are used to account for and report the financial resources that are restricted, committed, or assigned to the expenditure for capital outlays. So that includes the acquisition or construction of capital facilities and other capital assets. Capital project funds exclude those types of capital-related outflows that are financed by proprietary funds or for assets that are going to be held in trust. You probably won't have many of those types of activities. But the most common capital project funds found in libraries are your LERF and your construction fund. You might also have just a fund called capital projects. And again, you can see on the left our gaps or our ranges that we've provided for future funds or capital only type of gift or rainy day funds. You could have a grant that is specifically for a capital item, and you would want to account for that in the range 422 to 450. Permanent funds are next. Although they're not very common, they would be used to account for and report resources that are restricted to the extent that only the earnings and not the principal can be used for purposes that support the library's programs or to benefit its citizens or patrons. Because these are pretty rare, I'm not going to talk about much any further. As I said earlier, we haven't even prescribed a specific fund for this, but we have given you the range in case you run across something that you think might be considered a permanent fund. And if you're not sure, give us a call or shoot us an email and we can walk through that so you can properly report it in the correct fund number and go from there. Proprietary funds are next. They're used to account for a library's business type activities by focusing on the determination of operating income or changes in net position. What you might experience in a library setting would be an internal service fund. Internal service funds are used to account for the financing of goods or services provided by another fund or department or even another agency sometimes to funds, departments, or your agency, and can be on a cost reimbursement basis. Again, I think these could be pretty rare. An example might be if you had a self-insurance fund, which a library can establish under Indiana Code 5-10-8-2.6. And a self-insurance fund is a fund where you accumulate resources to pay insurance claims. So if you've established that fund and maybe you've determined your operating fund is going to kick in so much per year, and then you have another fund that's going to kick in so much, that money is going to be accounted for in your self-insurance fund. And then as claims come in, you will disperse out of the out of your self-insurance fund to pay those claims either to your employees or to medical providers or whatever it is. That's an internal service fund. That's internal within. You're not paying for insurance outside. You're kind of handling it yourself. You may have a third-party administrator that kind of oversees that and makes a determination of when a claim, is payable or not. But that would all be accounted for in a self-insurance fund, and that would be under the internal service fund type. Fiduciary fund types, those are for funds used to account for and report assets that are held by the library in a capacity for others, and they can't be used to support the library's own programs. And within there, there's a couple of different types, custodial and trusts. Custodial funds report financial activity of money that you have in your custody that relate to library activities, but they actually belong to someone else. Some common examples are the Plaque Fund and Evergreen. And as I mentioned earlier, maybe a sales tax fund if you have that. Now, custodial funds aren't going to include payroll or payroll withholding funds. We'll cover that in a minute. Trust funds are used to report all fiduciary activities for trust arrangements where resources and assets are administered through a trust where the library is not a beneficiary and contributions to the trust and earnings on those contributions are irrevocable. So again, not likely in a library setting, I don't think. An example, although this isn't permitted, for a library, would be if the library had its own pension plan. Instead of retirees being paid through PERF. Some cities and towns, there was a provision many years ago that their police and their fire could have separate pensions. And so some cities and towns have a police pension fund on their books and a fire pension fund on their books. And members of those pensions, the city or the town actually issues the monthly benefit check instead of like in a library's case where that would come from PERF. So in a city or town, those pensions would be considered trust funds. So I don't think you'll probably have anything that you see like that, although you could. So we wanted you to be aware of what those are. And again, let us know if you have any questions. The last type is other. Other funds are used to report funds that don't meet the criteria of any other fund type, but they should still be included on the financial statements. Within other are clearing accounts, which are used to accumulate resources from withholding of employee payroll deductions and accrued employer payroll taxes. So these resources will be paid out to employees from a payroll fund if you have that. And the payroll deductions will be submitted to the appropriate taxing bodies or to whomever the deduction was made and needs to go to in the future. So those vary a little bit from a custodial fund. We're going to report those just as other, but they are still necessary to report. I mentioned those gateway numbers earlier, and I would show you where you can find them if you wanted to see what they look like. There is a table you can find. It's within under Gateway. If you're on our website, under the libraries page, and you scroll down to where Gateway is, and click on that triangle, it'll give you some drop downs and some sections. So you want to look for the annual financial report. And then where you see the blue arrow, there is a link to that code table named Funds. And when you click on that, it'll open an Excel spreadsheet that looks similar to this. The spreadsheet can be sorted by unit type. So you can see there's a column for townships and cities and towns. I've highlighted the library one, so I filtered it to say yes for any funds that apply to a library. And over on the right, on the left, sorry, where the red arrow is the Gateway or the annual financial report standard fund number. Again, that's that 6-digit number. I have a circle around the tab that says Fund tab. Some of these tables, when you open them, have multiple tabs. So if you open it and there's more than one tab, you're going to want to look for the one that says Fund table. And then look for the yeses or the Ys over here. Rainy day fund, these others, you can see there's a Y because cities and towns can have a rainy day and townships can too. But that's a little more information on those gateway numbers if you have any questions or curiosities about them. Well, that kind of wraps up the fund names and the fund numbers for now. As Susan mentioned, we're going to have more training throughout the year, whether it's in November or a special maybe training session through WebEx, or maybe we'll just, the two of us, she and I will sit down and make a recording that we'll put on our YouTube page and let you know about it. You can go watch whenever you want. In any event, or it might be all three of those options really, because there's a lot to remember and know between now and the end of the year, including whatever changes are coming for Gateway into the annual report. There may be some, Susan mentioned others that are already in Gateway, so you aren't going to be needing to do much there. But usually in November, we go through the annual report and whatever changes there are and show you, how to enter information and do that. So I would anticipate something very specific for the new changes coming down the road in November. I'm going to wrap up the rest of my session talking about some audit engagement information. And the first thing is, back in April, the state examiner issued a memorandum showing our appreciation for the dedication and the hard work that all library officials have demonstrated during 2020, as well as being very flexible and patient as we learned how to do a 100% audit, remote situation. But as of April the 12th, so almost a couple of months ago, we began a hybrid in-person or remote, hybrid in-person/remote approach for audits. And we're doing that to help bring in the optimal audit experience for both you as the auditee and the Board of Accounts. So that hybrid in-person remote method, the plan for that is to be on site at an audit engagement 2 days a week while we're doing the audit. Now we know that we're not out of the woods yet on the pandemic and that you've got to work within your local health requirements. And as circumstances change, if there maybe is an upsurge or an uptick in cases, maybe you have to make changes. Our auditors are going to work with you at the time of your entrance conference to determine the best approach to take to implement the hybrid schedule and how to conduct ourselves while we're on site. Is there a separate room, a separate entrance? Is it not going to be a problem at all? That kind of thing. We'll hash all that out at the entrance conference and work with you so that we're there a couple of days a week. So we ask that you be flexible. I think that's going to help everyone in making our hybrid method work. And again, if you have any concerns about that, please contact us and we can try to address those or take them to our board if it's something that the board needs to make a decision about. Now, due to the massive amount of federal monies that have been distributed recently with the CARES money last year and the American Rescue Plan Act money, currently, we expect most of our units are going to have some kind of federal audit requirement for 2020. And, we have cities and towns that may have never had a federal audit before, but they got so much CARES money last year, they're going to have one. And federal audits take a lot more time to do. We're auditing not only what we audit normally, but we're auditing those major programs, those federal dollars, and looking at those and make sure that the unit has complied with all the requirements for that. And so that's going to trickle down as we spend more time on counties and cities and towns to some of our other unit types and how we're able to get audits conducted timely. So the Board of Accounts is contracting with some CPA firms to do some audits of libraries that will free us up to do those other federal engagements, maybe some at libraries, and definitely cities and towns and counties across the state. This is a one-time contract for your current audit engagement. If we're doing you this year, it doesn't mean that your audit will be done by a CPA firm in the future. The majority of the library audits will still be completed by State Board of Accounts staff. Checked the list the other day of those that were contracting out, and I think there were only 9 or 10 libraries on that list, so this doesn't impact most of you, but there are going to be those 10 libraries out there that will have a CPA firm do their audit this year. And the state examiner has made that decision to have a CPA firm conduct some of these audits. He has statutory authority to do that, and in that very small print there is Indiana Code 5-11-1, which gives the state examiner the authority to contract with a private examiner to conduct an audit under the supervision and guidance of the State Board of Accounts. Once that audit by the CPA firm is completed, they provide it to us and we review it to make sure it includes everything that it should include, which would be the things that we normally audit for. And then once that's approved, then we post it to our website and it's filed as a public document. And then that last bullet point is important to remember that even if you're done by a CPA firm, that the audit fees that you're going to pay are not going to increase as a result. The audit fee rates are found in statute, and for libraries as a taxing unit is $175 a day. For an audit, there are always some small technology and processing fees that varies depending on the audit engagement. But the Board of Accounts is subsidizing the cost of the contracted audit. So the contract with a certain CPA firm costs so X amount of dollars. You're going to get charged $175 a day, which is going to be less than what we're paying the CPA firm, obviously. So that difference is going to come out of the Board of Accounts subsidy that we're not passing along the CPA firm's contracted amount on to you. You'll still get charged that $175 a day. If you are one of those 10 libraries that is having a CPA firm do your audit, you either already have or will be receiving an email from Jennifer Marshall. She's our Director of Audit Services over Procured Audits. And she's in communication with the audit firm and let them know what audits they're going to conduct. And then once that gets going, the CPA firm will contact you. They'll first have an engagement letter that they'll send that you'll sign and return. It's very similar to some of the forms that a Board of Accounts audit would have for you to sign at the beginning of an audit. They'll also communicate the items that they're going to need to do the audit and how you're going to process and get that information to them. They will have access to your annual financial reporting gateway, your monthly uploads, that information, but there still may be some other items that they'll want you to provide. And they'll also give you a link to their firm's upload portal of where you can send anything that needs to be sent electronically to them. So again, for those 10 or so that are going to have a CPA firm audit, what you need to expect is you need to be responsive to their audit requests and return items by the date that they've asked for it to help get your audit, keep your audit flowing smoothly and get it completed timely. If you anticipate that you may not be able to electronically provide some of those documents, please contact Jennifer Marshall, and her email address is there in that first paragraph, procuredaudits@sboa.in.gov, and try to detail out the situation and why you may not be able to do so, and we can make arrangements. As I mentioned earlier, when the audit's over, they'll submit the report to us. We'll take a look at it, make sure it had everything it had, and issue the report, and then the audit fees will be billed to you by the Board of Accounts as if we had done the audit. And the state examiner, Paul Joyce, is requesting your full cooperation with the auditors from the CPA firms, just like you have always been gracious and cordial and cooperated with our field examiners when we're there doing an audit. Just view them as if they're Board of Accounts field examiners and treat them with that respect and get them that information that they need to get your audits done as soon as they can. And in addition to Jennifer Marshall, if you have any questions, you can always contact Susan or myself, and we can try to get you through the situation and answer any questions that you might have. So with that, there's our contact information for if you need it for us, libraries@sboa.in.gov or 317-232-2513. And now we are able to take any questions that might have come in while I unshare my screen.
We have quite a few questions, starting with John's question up there around 205 about software vendors.
The question is, will this be up to our software vendor to create a matching report format to upload onto the annual report gateway? Yes, if you're using a computerized software vendor, we have tried to, well, we've been in communication with most of the more common ones over the last couple of years. And they are aware of the new chart of accounts. I mean, they're aware of some of these changes and the fund types, and they can make any changes that they need to in their programming to fit. I think most of it's going to upload into Gateway just like it was before. Those standard funds, Gateway is already going to know what fund type they are. So they're already going to know your operating fund is a general fund type. You don't have to go in there and select that. There are going to be those custom funds that Gateway is not going to know because they're custom to your unit, that you're going to have to probably go into Gateway and from a drop down select the fund type. So that's why we wanted to take time starting now until the end of the year to familiarize you with what these fund types are, because you're going to have some funds that aren't going to fit into what we talked about today, and so you're going to have to fit them into a fund type. So yeah, the software vendor should be able to create some reports that will upload into Gateway without any problem. Can you give an example of what would be in a contractual services fund? I know where that fund is in the statute that calls for that. And it has to do with, and Susan, I don't know if you know off the top of your head, I would have to look because it's been a while since I've looked at that, but I can't think of an example right off. Do you know of one?
Yeah, I'm sorry, I haven't looked at it for a while either.
Here, Mike.
I haven't looked at it for a while either. I'm sorry. If they want to send that question in, we'll research that.
Yeah, and I can look through some other library reports and find some that maybe don't have that name or something that fits that. But yeah, we'll look at that and get back with either you individually if you want to shoot us an email, or I can get it back to Haley and she can distribute to everybody. Now the next question is, how do you know when you're going to be audited? You'll get some notification prior to an audit. It may not be very advanced, or it could be you'll get some information and it may be several months before we show up. You can kind of judge by when your last audit was. I looked on our website recently, and it seemed like most library audits were occurring with a 3-year audit period. So you might remember by statute, we're supposed to audit everybody once every 4 years, or it can be more frequent. So if it's been 4 years since we've done an audit, you're probably going to get hit this year. If we audited you last year and you don't have any bond or debt reporting requirements, like to a bonding agency or a bank or something like that, and you didn't get a whole bunch of federal money, over $750,000 is the threshold for a federal audit, then we're probably not going to be there this year, and it may be next year or the year after. So that's about the only way you're going to know. You kind of have an idea of based on when your last audit was, and if you have any debt reporting requirements, those require an annual audit. Or if you've got $750,000 in federal grants, that requires an annual audit. Otherwise, it's probably going to be 3 or 4 years after your previous audit. Your previous audit is when we'll be there. The next question is, can any public libraries get an ARP money or reimbursements? That American Rescue Plan Act monies only go to counties and cities and towns. A city or a town or a county may have the ability to provide some funding from that to your library if they choose, but libraries won't be getting that money directly as a recipient of that grant. It might come, if you were to get it, would be through a city or a town or a county. There was a question from one of the 10 that's having an audit by a CPA firm. And then the question was, will the audit opinion letter come from the Board of Accounts or the CPA firm? And Susan, correct me if I'm wrong, but I think the opinion letter will be from the firm itself with a cover letter that we have reviewed the audit report, the financial statements, the working papers of that firm, blah, blah, and basically that we're good with their opinion type of thing. So, but I do think the actual opinion letter will be from the CPA firm. Here's a question that says, can invoices be scanned and stored in lieu of paper? And the answer to that is yes. We wouldn't take audit exception if you had paper documents that you were scanning and keeping those files electronically. The thing you want to keep in mind is having internal controls in place to ensure that once you've scanned a document and it's stored electronically, that it can be retrieved. So when we're talking about lengths of audits, you know, if you scan something today and stored it electronically and we don't come into audit for 3 or 4 years, we have to be able to get to that document. And if in that time period, if something happens to that file and it can't be read or something, you know, when they're doing the audit, it's going to be as if it didn't exist. So if it's a bunch of checks and claims and stuff that you've scanned and you go to open them 4 years later and they don't work for some reason, that's going to be an issue. So you might want to have a plan in place to check and make sure those files are, you know, periodically test some of them and make sure you can open them and see them, and that we would be able to do that during an audit. But sure, if that's your, if you want to have controls in place to scan and store documents in lieu of paper, you certainly can. Haley, I think that's all the questions. And I think with that, I'm ready to turn it over back to you.
All right. Thank you so much, Todd and Susan, for all of your help and information today. Next up, Jennifer Clifton, Director of the Library Development Office, is going to be filling us in on news from the State Library.
All right,
Jen?
thanks. Thanks, Haley. Good afternoon, everybody. I've just got a few updates for you today, so don't hop off, because if you do, you'll also miss your LEU certificate. So we have a few new staff at the Indiana State Library. Our Talking Books and Braille Library Division, Laura Williams, who previously worked as a librarian within that division, is now the supervisor. And then we've also hired a new rare books and manuscripts supervisor, and her name is Victoria Duncan, and she's from the Indianapolis Public Library. So we're excited to be working with her. You may have heard that we are looking at standards and certification again this year. It's been a few years, so we're forming a task force to review both of those in 2021 and 2022. So if you are interested in serving on that in any shape or form, please let me know and I'll add you to the list, and we will be following up with everyone a little bit later this summer. There will be some updates to inspire.in.gov later this year, I think within the next couple weeks. We're working with a agency and there's a new look coming, and then also some curated views for different ages of students that feature the age appropriate resources that they use most. So be watching for that. If you are a certified librarian, you'll want to know that we are bringing the certification portal in-house. It won't be managed by the professional license agency anymore. It'll be here on our website. So we'll provide information for that, but anyone renewing their certification soon or applying for new certification will need to watch for that news. Someone was asking about, and I know Todd and Susan were talking about ARPA. We do have a portion of those funds that was given to the state library, in fact, $3.4 million that were given to us to distribute to libraries around the state. So we are still working on our plans. It's a pretty big responsibility, so we want to make sure we get it right. But we are currently developing the guidelines and application and list of allowable expenses. And we're even partnering with Indiana Humanities now to make sure that our efforts can serve the most people. So we do hope to release more information about that at the end of the month. But please know that there will be a grant opportunity for public libraries through that. Book club kits. I promised Suzanne Walker that I would share this link. She wants everybody to be aware of all the book book club kits available through the Indiana Young Readers Center. So if you're looking for books that align with the Tales and Tales theme of summer reading this year, she has plenty of those to go around. So check out that video and get in touch with her for those. If you are an InfoExpress user, we hope that you submitted your renewal within the past week. If not, please let us know. It's not too late. And please also know that July 5th will be a state holiday this year because the 4th falls on a Sunday. So we will not be open and we will not be providing service that day. And then the following day on July 6th, all state employees are supposed to be returning to the office. So until then, email is still the best way to reach us. Thank you for your patience while we've been in and out of the office, but we will be back in a more staffed mode next month. So that's all I've got. See a question. Okay, if you have to renew your license this month, I would still go through the normal method and just submit your renewal certificate as you normally would. I don't think it's live yet.
All right, well, thank you so much, Jen. I don't think there are any other questions. Thank you everyone for attending today. In the chat, I've placed a link to a form for you to fill out if you'd like to request LEUs, but if you already filled that form out this morning and you asked for LEUs for both the morning and the afternoon, you don't need to fill it out again. The recordings for this workshop are going to be available on our LDO workshops page where you also got your handouts, and those will be available probably by the end of next week when I've had a chance to clean up the closed captioning a little bit. If you have any further questions, contact us. Any updates, again, including the archive webinar, are going to be posted on the State Library's LDO workshops page. Have a great summer.